The positive momentum at Nigeria's equities market continued for the fifth consecutive session, largely supported by gains from the consumer stocks. Olamide Adeboboye, research analyst at ARM Securities, joins me for more on today's trading. Olamide, thank you for joining us. Let's get right to it. We saw some big names on today's top gainers list today. I'm just wondering, what is driving this positive sentiment at the market?
Well, it's a blend of different things, but majorly because of the results that we've seen in recent times, as well as you can see, investors are also looking at expectations, and then they're using that to basically just make their play in the market. One of the top gainers we had was Nestle, gained about 10% already today. Their results should be out anytime from now, and you would expect their interim dividend to come out. They should also pay their interim dividend, this period. We're expecting like a minimum of like 20 naira. And if you just try to look at the results that have come out, so far, the closest competitor to Nestle will be Unilever. And despite Unilever having a tough play in the market, last year they had quite a low base, and they've had, some issues in terms of their sales. Sales have been down. But recently, looking at their results, aside from the fact that year on year they had good results, quarter on quarter, the source sales actually improved. So it was a very good one. Their results in terms of sales was good. So given a Unilever that has struggled, in previous quarter, and Nestle that did well, they still managed to play well in the food space when things were pretty tough. So you would expect something, better from Nestle's results, even if it's not out yet. Hence the reason you're seeing, some buy sentiment into that. Also, if you look at stocks like Farm Mills was up by about over 6%, and they released their half-year results like yesterday, which was also pretty positive. We are seeing, very good recovery in sales for most of these players. So that's basically what is spurring interest in the market. For result that has been released so far, as well as anticipation of, better outcomes for the other players that are yet to release.
Now, while it is not unusual for investors to take position and cherry pick ahead of an earnings season, this year has been quite an extraordinary year with the COVID-19 pandemic and the lockdown that we've seen. I mean, one would have thought that investors would be a lot more skeptical and nervous, as it were, ahead of the release of some of these numbers. But some of them have been quite positive, especially from the banking sector. Do you think that we might see an increase in optimism as we get more numbers?
Yes, there's a very high tendency that you get an increase in optimism, and it's really not far-fetched. If you look at your fixed income market, yields are, ridiculously low. And of course, but if you're looking at, investment outlets wherein you can, generate some returns, where you would, consider safe in this year that seems to be a very volatile year, the next investment outlet for you will be equities, being that our alternative investment outlet isn't so mature yet. So looking at the equity space, you still see some, stocks that will give you higher dividend yields. They'll give you higher return relative to what you will get if you were to go get, if you were to buy fixed income instruments. Plus, I mean, this year has been really dicey for most investors as far as fixed income is concerned, because even with the low yield, you still have the federal government not supplying so much paper. So some investors are even unable to get, this fixed income instruments, leaving them with no other choice for some, than to just go to the equities market, pick the good names, and a lot of the stocks are actually cheap. So it's you just, playing to the tune. This year seems to be playing in a different tune and different direction entirely. So relative to running to your fixed income where you have a guaranteed yield and you don't have to, you can go to bed, it's a bit different this year. So you're looking out, right, this year is more of searching for what investment outlet can give you good returns at the moment, and it's still a bit safe. Hence the reason why from first quarter where the market was negative, second quarter we turned positive, and right now we're actually positive already. Yet again, I think we should be up about 4 to 5% already. So that just tells you that the dynamics have actually changed. Despite being a volatile year with a lot of uncertainty, you're literally not left with so many investment options at the moment. So hence the reason you probably continue to see that optimism for the market. The plus will be if similar to what you're having in developed regions where the second wave and a lot of them are implementing a set of lockdown. So if that happens, then maybe you might see a retreat. But at this very pace, yes, you could actually see more optimism in the market as new numbers get released.